A 50-year mortgage sounds like a nightmare, right? Like the kind of thing that locks you into payments so long you're blowing out birthday candles with your grandkids. And if you listen to the comments online, this thing might as well come with a ball and chain emoji stamped right on the paperwork. People are shouting many things, that this is debt slavery, that the bank will own you forever, and that this is how you stay poor for life. And honestly, if you don't understand how mortgages actually work, that fear feels so freaking real, because when your brain hears 50 years, it instantly jumps to wait, I'll be paying this till I'm almost dead. But here's the twist almost nobody online is talking about today. The fear is real, but it's pointed at the wrong thing. And the people yelling the loudest have never actually run the math. They've never dealt with a real mortgage, and they sure as shit have never helped a real family under today's stress test. So let's clear this up. I'm going to say something that might shock you. A 50-year mortgage does not trap you. It does not steal your freedom, and it does not mean you're stuck making payments for the rest of your natural life. There is something out there that can financially trap you, but this isn't it. I'm going to show you why people are scared today. I'm going to show you what a 50-year mortgage actually does. And I'm going to show you why this could be one of the best tools that we've seen in a long time to help younger Canadians finally get a foot in the door. And yes, I said help younger Canadians. And by the end of this video, you're going to understand why. Let's go. Okay, so first, let's deal with the fear. People hear 50 years and they picture a life sentence. They picture being stuck. They picture the bank controlling their future. But the entire fear is based on a giant assumption that is not true in real life. The fear assumes people are going to stay in the same mortgage for 50 straight years. Nobody does that. I don't even know what the stats are, but like no one stays in a 5-year fix, let alone a 50-year mortgage. The fear assumes people are never going to move, and people move all the time. The fear, people assume that they're not going to refinance or restructure. And like I said, most people refi multiple times over their life, let alone their term. The fear assumes people never make extra payments or shorten their amortization. But most families do that naturally as they earn more. The fear assumes life stays still for half a freaking century. Real life doesn't work like that. You and I both know that. A 50-year mortgage, it's not a prison, it's a runway, it's breathing room. It's a tool that's going to help people financially during the hardest years of their life. And this is the part I want to highlight very clearly. The 20s and the 30s, they're the tightest years for almost every Canadian family. You're early in your career, your income is still growing, daycare costs are massive, groceries like shit, they're going up day over day. Rent and or mortgage payments eat the whole paycheck. You're trying to save, you're trying to build a life, and these are the years where people need breathing room the most. A 50-year amortization gives that breathing room to those people. It gives people a real chance to qualify. It gives them a chance to enter the market instead of being completely priced out. And here's the key. They don't have to stay there like everyone thinks they do. They can refinance later down the road. They can shorten the amortization later. They can increase their payments later. They can retool the whole freaking mortgage once their income is higher and life is a bit calmer. A 50-year amortization is an entry ramp, not a trap. Let me show you with simple math so a kid could follow this. Let's pick a $500,000 mortgage. On a 30-year plan, your payment will be around $2,400 a month. On a 50-year plan, that payment drops to $2,100. That's about $300 of breathing room every single month. $300 is huge for a family in today's world. That's groceries, that's gas, that's daycare, it's hockey maybe. That's the difference between stress and stability. But this is where the internet freaks out. All those online warriors scream from the top, you'll pay way more interest. Yeah, if you take the entire 50 years and never change anything, you would theoretically pay way more interest. But that's not how real life works. Most families refinance every 5 years at a minimum. Most families increase their payments as they earn more and their incomes go up. And most families make lump sum payments when life allows. Most families don't stay in their home long enough to reach a 50-year mortgage anyways. You can always pay a longer mortgage off faster. No one's telling you can't. But you can always make a shorter mortgage cheaper. That flexibility is a lifesaver for young families. Now, let's talk about inflation, because inflation quietly destroys the fear behind longer amortizations. Your mortgage payment stays the same, but the value of money drops every year. so your payment becomes smaller in real life terms. Think about someone who bought a home in the 90s. Their mortgage payment today might be $600 a month. That's less than filling up a big truck with gas for the whole month. That's how inflation works. It slowly makes fixed debt easier and easier. So imagining your 50-year mortgage payment 20 or 30 years from now, it's going to feel tiny in like retrospect, not because the mortgage changed, but because the world's changed very fast. Inflation shrinks the burden of a long debt. Meanwhile, your income usually goes up, your equity certainly should go up, and your options will increase and go up. And your control increases over time, not decreases. So that's that piece. Now let's talk about fairness, because the hypocrisy around amortization rules is wild. We can be developers and we can use a 50-year amortization on giant buildings. Investors can refinance again and again and again. People can take interest-only mortgages where the amortization is literally infinite. You can take a reverse mortgage that lasts as long as you live. You can restart your amortization at every renewal for your entire life. But the second we talk about giving young families the option of a longer amortization so they can buy a home today, suddenly it's dangerous. Suddenly we have to protect people from themselves. This isn't about safety. It's gatekeeping. It's pulling the ladder up behind the people who already got in, and it's bullshit. And that's not fair. A 50-year mortgage, it won't solve the housing crisis, but it will give people a real shot at home ownership. It will open a door that's been closed for years. It will help people qualify when they can't pass the stress test today. And it will allow them to retool, restructure, and shorten it later when their incomes and life stabilize. It is an option, it's not a trap. So let's look at this all together now. A 50-year mortgage is not debt slavery. It's not a life sentence. It's not financial doom. It's a tool. It gives younger Canadians a chance to qualify in a world where qualification has changed and become harder and harder, like exponentially. It gives families breathing room during the years when life is most expensive, and it gives people time to grow their income so they can shorten their amortization later. A 50-year amortization, it's an entry ramp, not a trap, not a prison, and not a chain. It is simply another option that lets you start building equity instead of being stuck renting forever. Now here's the twist. There is something out there that can trap you in debt for life, and it has nothing to do with the banks. It has everything to do with what Ottawa just did. The real danger to your financial future, it's not that 50-year mortgage, it's our government's not so balanced budget. If you're worried about being stuck in debt forever, you need to understand the bill that's quietly being passed to you and your kids. So click the video linked right here, the one where I break down Canada's budget and show you what's actually happening behind the scenes. It's going to explain the real threat to your money, the one the headlines are distracting you from. Click it now and I'll walk you through the part nobody else wants to explain. Let's go.